that has been hit hardest by President Trump's decision to hike tariffs. There's a bloodbath on Wall Street. Ironically, the Indian stock market has held its nerve. This even though Trump imposed a 27% tariff on Indian exports to the United States because he felt India wasn't treating America right. Listen in, viewers. Donald Trump speaking. Are we playing the soundbite? There we go. Let's go. Their Prime Minister Narendra Modi just left US recently. He's a great friend of mine. But I said to him that you are a friend of mine, but you've not been treating us right. Listen in, viewers.
Very, very tough. Very, very tough. The Prime Minister just left. And he's a great friend of mine. But I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades. And it was only 7 years ago when I came in, we started with China and charged them. We took in hundreds of billions of dollars from China in tariffs. And they understood, honestly. President Xi understood. He said, look, I understand. And the other countries, and they all understand. We're going to have to go through a little tough love, maybe. But they all understand. They're ripping us off, and they understood it.
They're ripping us off, tough love, this, that, the other. The Indian government was quick to step in and calm frayed nerves by pointing out that India still held a competitive edge as other competitors were worse off. Commerce Ministry official says, quote, India is expected to get competitive edge over key competitors in the US, including China, Bangladesh and Vietnam on labor-intensive sectors. Response will be measured, calibrated, professional, unlike some countries that threaten American imports, unquote. Not just this, but the import tax applied by the US is not uniformly distributed across all categories of goods being exported out of India. And that's why India is also breathing a little easy and the stock markets have been calmed. And that prompts us to ask the fundamental question, is this talk of setback overblown? The opposition is saying it's a massive setback here in India. Let's open this up, viewers. Let's go straight across to 2 or 3 individuals who know their onions when it comes to all of this. And first, I want to bring in Mr. Sahai. Mr. Sahai, you are a long-time analyzer of commodities, trades, etc. I want you to tell us whether this is a massive setback for India or are these fears a little overblown?
In fact, 26%, 27% tariff on India is much more than what we expected when you are competing globally. Everything has to be relative. And that's why it's important to understand how our competitors are placed. Since on most of our competitors, particularly China countries from Southeast Asia and South Asia, the reciprocal tariff is comparatively higher than India. And therefore, in number of sectors, we tend to gain. Though, of course, in some of the sectors where our competitors are having lesser reciprocal tariff, we may lose out.
Which are these sectors that we will feel the heat in?
We may feel the heat in the marine sector, where Ecuador, which is the main competitor, main supplier to U.S., is at 10%. We will be at 26%. Some varieties of carpet, where Turkey is at 10%, we are at 26%. Maybe in some of the sector of gold jewelry, where the Middle East is at 10%, we are at 26%. But in most of the sector, when we are talking about apparel, leather, footwear, diamond, gems and jewelry, plastics, chemicals, electronics, we tend to gain. That's why I think this is a huge opportunity which is knocking at our door. And probably this reciprocal tariff may turn out to be a blessing in disguise for Indian industry.
Okay, Mr. Mehrotra, your quick assessment of the facts. Is this a setback? Or is this talk a little overhyped, not quite matching the facts?
Well, we'll have to wait to see. Honestly, I think we've escaped a little. We've escaped in the sense that there are many products that are not included, like pharma and auto components and semiconductors, which affect our electronics exports. And on the one hand, that's one reason for my saying that we might have escaped. It could have been worse. And secondly, our competitors, it is true, have had a higher rate imposed on them. But the larger impacts will have to be observed over a period of time. We'll have to wait to see how this plays out.
Okay. Viewers, one of the reasons perhaps we've been insulated, and I want to bring in Mr. Bagga as well as PK Basu. PK Basu, on the larger picture, the domestic problems for Trump. The markets have melted. Even this morning, they've opened up,
Rahul, your
this
voice is
evening,
going in and
opened
out
up,
for some
opened up
strange
in the States. And viewers, there's a bloodbath actually on Wall Street. I'll come to you for that, PK Basu, because does Trump really have the legs to continue with this? I'll come to you with that question. But I want to bring in Mr. Bagga. Mr. Bagga, many people say that the Prime Minister has played his cards very shrewdly. He's read the landscape and he has realized that through perhaps diplomacy or whatever else, perhaps bringing peremptorily the tariffs down, he could lessen the impact on the Indian situation, on Indian industries, etc. Would you agree with this statement, or would you say that this has been somehow a complete fluke? It just so happened that sectors that we would have stood to really get hurt on somehow have been excluded from the basket of tariffs?
No, I think the government needs to be complimented on the work done, on the engagement, right from the Prime Minister to Mr. Piyush Goyal being there. Then last week we had a big delegation of the U.S. Trade Department. But these agreements take time, Rahul. So normally you would expect 5-6 months to iron out an agreement like this. And our expectation was that reciprocal tariffs will come on everybody, and then they would want a negotiation done. They have U.S. has kept the number slightly higher than what we really expected. We were expecting between 10 to 15% tariffs on India. If you look at the average tariffs that India is implementing on all U.S. exports coming into India, imports coming into India, it's 12.5, and the U.S. is charging us about 2.5. So we were expecting that the difference of about 10% would come in. This 26, 27 is on the higher side, but definitely government to government work is happening, and we are quite sure that bilateral trade agreement will come through. It will take time.
But if it is supposed to be reciprocal, then why is it slightly higher for us? Why should that have been the case?
What our calculations are showing, this a question was asked on to the U.S. Trade Representative as to what is the formula you have used. They gave some elasticity and all that formula, but what it is coming to basically is your trade gap and your total imports. It's the ratio of that. So China is about 230, and its its imports are about 430. It comes to roughly about 57%, and they have been charged 34% on that. So 67%, sorry, and they were charged 34 on the margin plus the 20 that were there. Same way for India, that number, Rahul, came to 53, and they have halved that. So that is a bit of posturing on the part of the US. So it is a 6th class mathematics formula, and Professor Saab will laugh at us if we tell him that's the formula used, but somebody's done back of the envelope. They have just used the trade gap, and they have just used the total imports and made a ratio, and then given you a 50% discount.
Well, Trump is trying to hustle. That's what he's doing. He's a great hustler. He's trying to hustle, but I hope it's not going to be at the cost of goodwill, viewers, because that is not recoverable. Let me tell you, everything else is recoverable, not goodwill. But PK Basu, has Trump made actually life more difficult for American consumers? Yes. And will he be able to sustain this?
Well, absolutely. I mean, any tariffs automatically hurt consumers. But here, the focus of President Trump is to try and benefit American producers and American workers, to try and regenerate manufacturing. That'll take time. The immediate negative impact will be felt by consumers, but of course, the consumers will not feel, I think it's important to understand that imports are only 20% of GDP in the US, and a tariff has been imposed pretty much on all imports, 10% tariff on all imports, and differential tariffs on different countries. Now, the point is that perhaps the effective tariff rate is going up to a little over 20%, which is the highest since the Second World War. And but the point is that it's only 20% of total GDP and, maybe 20% of consumption, or maybe slightly more than 20% of consumption that is imported. And therefore, this increase in tariffs will have a very marginal impact on inflation. It will delay the rate cuts by the Fed. The Fed rate cut, the first one, probably cannot happen for September. But the point is that Trump is trying to start a negotiating process.
Okay.
So this, the 26% was arrived at.
I understand. Maximalism. Yes, Mr. Mehrotra.
No, it's not maximalism.
Okay.
You see, the fact is that India's exports to the U.S. are about double India's imports from the U.S. And if you look at
No,
China,
but that's fine. I have no problems with that. In fact, that
China's
should be the case
exports
even
to the
with
US
China.
are
That should be
more
the
than
case with
triple
every country. I'm not going. I'm a patriot, viewers. Let's be very, very clear. I would want a trade deficit in our favor with every country. I give two figs about Mr. Trump and what he wants to do with his own American economy and so on and so forth. But very quickly, I think you're right, PK Basu. I understand. But this
is on
is
patriotism.
there are no.
Let me just tell you one thing.
Yeah. Yeah.
India has a big trade deficit on goods, which is offset by a massive trade surplus on services and income.
Yeah.
So that is the reality of our current account position.
Yeah.
And we have deficits with a lot of countries.
That's
but with
fine,
the
but if
US,
we've
of
been
course,
able to
we have a
negotiate
surplus.
well, viewers,
With
and
the
do
US,
something
we
in
have a
our favor
surplus.
with the largest
And
trading partner we have,
let us
it's
just
good for us.
understand.
One second,
Rahul,
Mr.
can I just
Mehrotra,
finish?
very
Can I just
quickly.
finish?
One second,
point-
PK Basu, one second. Let's just hold our horses. I'm not here in any way giving a medal to Trump. As I said, I don't care a toss for Mr. Trump.
You have to understand the rationale.
No, I
of
don't
what
want
he's
to
doing.
understand the rationale.
is-
I want to understand, viewers.
you can keep on
Look, we all understand the
point is,
rationale. We
you
all
are
know the rationale. He
negotiating
wants
with-
equity. He wants this. But is he on the right track? That's the fundamental question, viewers. Many people are saying
Right
that
on
he's
what?
not. Because in the past,
Right on what?
in the past, when American presidents, especially before the World War, have raised tariffs, they have caused a recession in their economy. He is
Nonsense.
copying.
This is rubbish.
No, it isn't.
No,
It's a
first of all,
fact. Please.
the smooth
One second.
Holi tariff
Mr.
was an
Mehrotra, I want to bring you in
80%
here.
tariff.
Okay, PK
80%
Basu.
tariff. This is 10%.
Okay,
You know,
one
please,
second,
80% tariff and 10%.
Yeah.
And also between 1865 and 1915, America built
Okay.
its industry on massive protectionism.
Okay, yes.
So, I mean, this.
So, and where did it get
smooth
them,
Holi
viewers?
is 80%
One second, Mr.
tariff.
Mehrotra. Yes, very quickly, Mr. Mehrotra. Make your point. Yeah.
Rahul, can I be sure that Mr. Basu is not going to interrupt me?
No, he
because
won't.
He
Just
kept
carry on.
interrupting you.
Make
Thank
your
you.
point. Yeah.
Thank you. Okay. Very simple. I think there have been estimates already been made that this is going to cause a recession in the United States. We know that. And this is going to affect the global economy, and it's not just going to affect us. Because it's going to bring a recession and it's going to reduce global GDP by at least 1 percentage point very shortly. A recession is already been practically announced. What we are going to see is that our exports will fall.
Will they fall? On that point, one second, let me bring in Ajay Sahai. Will they fall, sir? You are on the Federation of Indian Export Organizations. No, let's just get him in. He's got a very, very ground perspective, and I don't have much time. Sorry. Yes, Mr. Sahai.
In fact, the global trade is likely to decline to some extent. That may affect us, but we are seeing a lot of diversion of exports happening to India. Okay. And therefore, we are confident that at the end of the fiscal year, probably exports will move drastically and we will be touching close to $900 billion plus of exports.
Okay. Well, viewers, the numbers, you can crunch them differently, but the fact of the matter is this is a bit of a wrinkle. It's a bit of a wrinkle and it needs to be ironed out. Piyush Goyal has his task cut out. He needs to actually shorten.
It's much worse than that.
It's much worse. Okay. Some people say it's much worse, viewers. We'll just have to wait and watch. It's early days.
He's living in cloud cocoon.
Okay,
and
well,
Mr.
the
Mehrotra.
markets in America are bleeding, viewers, and that's always an indication that there is something grossly wrong. There is an indication. There is something wrong. The markets there are jittery, and I don't know if Trump will have the ability to sustain this. I don't know, viewers. Does he have the legs? He backed off in his last term. Let's see where he goes with this now.